Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Monday, October 22nd, 2012. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, another down day on Wall Street. Not surprised to see it. We'll go over the reasoning behind that shortly. First off, S&P down about 7.5 points, or 1/2%. Dow down 75 points, 0.5%. And the NASDAQ is actually going stronger today, down just 2 points, or barely 0.1%. Now, the reason why the NASDAQ is so strong today is because Apple's having a pre-earnings bounce. Apple reports earnings on Thursday. It got decimated last week. It is having a great move here to the upside, up almost $17, and it's single-handedly lifting the NASDAQ 100 and the NASDAQ itself higher. Baidu up slightly. Aside from that, most other tech stocks down. Google's down 7, Amazon's down 7, which is a walloping for that stock. And we're also seeing, other stocks out there slightly lower across the board. But again, Apple is lifting the NASDAQ. Intel's actually also up today, which is helping the case as well. But again, bottom line, markets across the board, except for the NASDAQ, very, very weak. Now, let's take a look at a couple keys here, because the market could have gone either way today. All right, you had a wide range bar on Friday. Wide range bars mean more downside. So we knew there was going to be more downside. The question is, was it going to happen today or not? And the charts actually told us this morning. How did they tell us? Well, you can see here, you inched above on Friday into the end of the day above this green trend line. This green trend line, by the way, is really everything. Because look at this. If we zoom out, this trend line goes all the way down, all the way. Look at how far back this thing goes. All the way back to essentially May. All right, early June, May, right around this area. So that line is huge. Now, if we zoom back in, you can clearly see that we were kind of fighting with it on Friday. Were we above, below? And Friday we closed below. Now, what am I looking for here? I'm looking for confirmation of a close below based on the first move today. First move was a gap down, a close below the low here. That means it's confirmed. That means this line has been officially broken. I love how the markets came up here, hit that line, closed above, no confirmation. You would look to go short here. Markets since then have collapsed down beautifully. All right. Now, in one aspect, you actually have a positive here, a short-term positive on the markets, because you have a bottoming tail. Here's a bottoming tail on the SPY. All right, you went sideways, 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 broke up. Now you're consolidating. This is actually the beginning of bullish consolidation. So you have a bottoming tail, which is positive now at these lows. This trend line, by the way, I'll show you in a minute how big this is, but this is a big trend line. And again, a little bit of a green candle with inside bars could be setting up for a little float up into the end of the day. So just be aware of that, folks, all right? Be very, very aware. We'll continue to follow it very closely as well. This trend line matches up perfectly with the early October low pivot here. And again, that's what we're kind of fighting with now. So we're below the green line, but now you're into this big area of support at the lower side from early October, mid-October, and that's what's trying to keep the market up right now. Now, will it happen? We'll find out. Charts right now are positive. So it tells me until we close below the low, that bottoming tail, this market has a chance to go up into the end of the day a little bit. I don't think you're looking at a big move by any stretch. I don't think there's a catalyst for that, but I think you could float up a little bit going into the end of the day. All right, so that's that chart. Let's take a look at the dollar today, the UUP, which is the ETF that tracks the dollar. That ETF is flat, but notice how it's gone up from the lows here. So remember early in the day when the markets popped up in that first move back into that key green trend line? And let me just show it to you again here on the spiders so you can make sure to understand. So this move up, notice how that move up on the spiders, which is the S&P tracking ETF, coincided with the dollar moving down. Since the dollar moved down, it has reversed and floated up. What has the market done? Reversed and floated down. So again, your inverse relationship to the dollar in the markets continues to be dead on. And again, you can see it right here. Here's your initial move down on the dollar, and then the dollar goes up. Market essentially went perfectly inverse to that this way. I mean, this is the chart of the market. It gapped down, moved up, and then fell. So you can see the inverse relationship very nicely there. Okay? So that's what we have going on there. The GLD is up 34 cents. I told my members over the weekend and such that the GLD looks very, very good here in terms of support. If you go to the daily chart, you can see into the 50 MA. You're going to get some sort of bounce here. It's already starting. Do I think it's going to be a big bounce? I don't know. I don't think it's going to be a huge bounce. But again, you could get a couple-day bounce out of it, maybe a 3-day bounce or so. SLV is bouncing a little bit, never confirmed below the 20 MA. I would love to see the SLV dump out into the 200. That would be a no-brainer buying opportunity if it did happen. So one to watch there. All right, we talked about Apple, Google, Amazon. Amazon, again, getting hammered. Amazon, let's take a look at that chart. Look at this. And this was a perfect bearish setup, folks. I mean, if you're looking for charts that tell you exactly where something's going, this chart was choreographed perfectly. All right, if you looked at this chart and you didn't know where it was going last week, you are sorely in need of some training in terms of understanding charts. This was one of the easiest chart setups you'll get, as was the Qs, which we took in the Research Center, which is geared towards swing traders and investors. Take a look at this. Down move below the moving averages, you confirm below. All right, so you know you've broken the moving averages based on confirmation, which is a proprietary index here, proprietary indicator. Now, what happened after that is you went sideways to up, which is an in spirit of bearish pattern, into the necktie dual moving average resistance. This is telling you, this pattern is telling you, especially with those moving averages there, that you are going to collapse. Sure enough, 1, 2, 3 bar surge coming down. Where is your short-term support on this thing? Right here, guys. Very, very close. Very, very close on this. If this hits this level, I actually think Amazon's a short-term buy for a couple days for a bounce. All right. Let's take a look at some other stocks out there. How's Caterpillar doing? Caterpillar is actually up. They reported earnings this morning. Nothing much doing there, only up 63 cents. But in a down market, that's actually semi-impressive. So it's doing a little bit better. 3M today, let's take a look at 3M, down 93 cents. SPG, trading down $1. SPG, beautiful in spirit of bearish pattern, tagged to 50. And this is another pattern. I mean, look at that. Downward consolidation into the moving average, and it's dropping today about $1. Again, a great pattern set up there. I released a hidden gem today. That is going to be a long-term winner, in my opinion. Beautiful small cap there. And again, if you join the Research Center, you get that. So come take the 7-day free trial to InTheMoneyStocks.com. Take it to the Research Center. Take it to the Intraday Stock Chat. Either one, you get 1 week worth. You can get them together. You can get them separately. Doesn't really matter. And a point being, the proprietary PPT methodology we teach here is basically the tops in the industry. All right, Goldman Sachs traders, JPM, hedge fund traders, all these guys, they wish they had a methodology like this. In fact, we have some people that are learning it from there right now. If you're not trying to learn it, you're missing out. I mean, you're just going to basically accept losses, in my opinion. So don't let that happen. Again, be on par with the big boys. This is what we're offering here. Getting league, be understanding of what the big boys are making money off of, how they're doing it. You can do it too. All right, guys, take care. Have a great afternoon. Come join us here at InTheMoneyStocks.com.